All right, guys, let's go ahead and get into it. No time to chit chat, waste no time. We need to go ahead and get into this review here. And I'm going to cover the stuff that I told you guys I was going to cover in the Facebook group, okay? But pretty much, red day to day. I'm not going to complain. IMPP. I got out just in time, but I was kind of able to put, two and two together to be able to determine that. And, in this video, I want to show you guys pretty much what kind of led me, to make that decision overall, so you kind of understand where I'm coming from and why I show you guys this stuff in the course if you're in there, and why I cover that and why it's important. This is a prime example. As a matter of fact, today itself was a prime example of, everything that I'm about to show you because market conditions, are changing right now, and we'll go over why and all that good stuff here. Okay, so pretty much there's a few things happening in the market. If you weren't, aware of it or paying attention to it, or if you're just like in the alerts, and if the admins or I don't mention it, you're probably not going to notice it because you're probably not sitting in front of, like CNBC TV and stuff like that all day, which is fine. I mean, we try to throw in those nuggets in there when we can, but I want to kind of cover, all that stuff here with you today as quickly as I can before I get to, going to do my stuff. Okay. So let's take a look at the trade with IMPP. Pretty much, posted it in the group for you guys. Um, the crazy thing is, it was on the watch list, and I told you guys why I was gonna look at it, but I woke up late today, man. I was tired. I'm still working on getting that you know, other stuff in the course put together for you guys. But as you can see here, the oil energy hop plays are cooling off, and I told you guys that. And I was saying that it was the one that seemed like it had the most action remaining out of it, and it ended at 449. So if you were up trading in pre-market, congrats to you because you had option, you had time to get to it. Um, Unfortunately, I didn't. I was tired. I was sleeping, and I got up like a little bit after the run had already happened. So, it did its little thing, did a little cup and handle there, failed to break out. Pulled back again, and then it broke out a little bit more, and it started to rise towards the opening bell, which I kind of figured because you got to remember around this time here, more brokers are opening up. So you got to remember you have other, traders looking at this stuff. Other investors might be looking at it. You have people probably hyping it in chat rooms and things like that. So it's going to have some little bit of movement there. Now, but I told you guys in that, you know, watch list for the morning that, hey, it's cooling off. It's not going to run. And I personally, I should, I knew that myself. So that's why I was able to get out when I got out. The one thing I didn't take into account, which you always should take into account when you're, trading for the day, especially in the morning, is the way the market movement is. And I've said this plenty of times. I don't know why it didn't cross my mind. I guess I was in such a rush just to kind of get things together and get into the market. Um, there was no volume anywhere. You know, it things were light yesterday and things were light pre-market today until, until what happened later on, which we'll cover here in a second, and why it happened. But market was light. There was a little bit of volume. There was no big percentage gainers. So, you know, I should have paid attention to that a little bit more and realized that hey, it's not going to be much runners. And I did kind of catch on that just a little bit late. So that's where I kind of made the mistake entering where I entered in at on my trade with IMPP and that's why I took that loss. So one thing I did recognize, like at the point that I did, decide to like, okay, this might be a trade to get um, into, what I did realize here was that at this point here, I was kind of already late in the game, and this was too close to the bell for me to want to take that risk. Yeah, it was on a pullback, but I was trying to remember that hey, what I should have taken into account was that hey, it's been low movement in the market, so come opening bell, it might not shoot up as much as you think it should. But I didn't take that into account, which made me, it caused me to jump into the trade at a high point. I think I got in like 587. Look at that. Like I got in like near the top, but I was able to quickly recognize that this thing isn't moving because by the time I got in it and recognized it, I'm like, wait, market was slow. Energy and oil and stuff like that is cooling off. Cybersecurity, all that stuff is cooling off right now because of what's going on. They're all probably like at their peak. There's not much movement. Why am I staying in this trade? There's no momentum showing, and level two looked weak. So I'm like, okay, go ahead and just take this loss. I was wrong. I got in wrong. That's just it. You got to be able to admit when you're wrong, guys, when you're day trading. I mean, that's just like textbook 101. If you don't, let your ego get ahead of you. Yeah, I've made a lot of money on IMPP, but I'm okay with taking a loss too. But what if you were in the opposite position? What if you were in the position where you've lost a lot of money on IMPP? You can't take another loss. That's where psychologically is going to mess with you. And you got to practice that, okay? It's okay to be wrong. I mean, you just got to learn from it. But this is why I was, I took my loss today. So I'm not mad. I'm just glad after reviewing my trade, which you all should be doing is reviewing your trade in your journal, and write down, your thoughts, process, what happened, what strategy you were going to do. What I was trying to do here was my ride the wave strategy, and obviously, it wasn't no way to be ridden. So, I just quickly got out. It wasn't there. I was watching to see if it was going to come back, but it never did. And so I'm like, I'm glad I got out. So I'm okay with that loss. I learned, and my strategy stuck to it. So, I just bought it at the wrong time. I don't like to buy it at the highs, but I did, hoping to just try to ride up a little bit, but no momentum came, and so it got out, and I got out. So that's pretty much how that worked out with IMPP. Now, the reason why that happened is I told you guys last night and on the watch list that market conditions are changing. Um, so let's take for example, Chinese stocks tank like crazy today. Why? Because U.S. tension, of course, with China and them shot with Russia. But not only that, but they had time limits to comply with the SEC saying that hey, you need to be able to get your books in order for us to keep you on there, in our markets. And they're like, it's Chinese, it's Chinese, stocks. They're not going to want to do that. But anyways, we're not going to go into why. But anyways, if you know like accounting and stuff like that, you know why. But anyways, they're all tanking, because of fear getting removed from the market and stuff like that. Makes sense. So that's a global macro perspective of why a whole sector like Chinese stocks was dipping. The market conditions are very important from the volume to what's going on with the market itself, whether it's the S&P and Nasdaq, whatever sector you're looking at, you got to understand what's going on a macro perspective, so that when you're zooming in and focusing on one stock, remember these stocks will follow the market. Every now and then they'll go against the grain, but it could be for like a particular catalyst, that it could be something in particular to make it move the way it's moving. But most importantly, they'll move with the market. And if it has momentum and the market's having momentum in that area, it's going to go with it. If it has momentum, but the market's going in opposite direction, it's going to slow down. It can still progress, but it's going to slow down. Okay. So you got to keep stuff like that in mind when you're trading and viewing and watching, like level two and stuff like that. So that's where I messed up at. I knew the market conditions were changing because on CNBC, it's like they were mentioning, I don't know if we mentioned it in the alerts or not. Um, but if we did, great. But if not, sorry about it. But you should be paying attention to that, especially if you're trading in the middle of the day, which is where everything began to take off. As you guys seen, all the energy stuff was, energy and oil was just barely spiking, moving a little bit, but not too much like they have been the last few days. That's giving you a sense of the sentiment of the market that these things are probably at a peak right now at the moment until, more attention is focused on the war and if it continues and stuff like that. Right now, these things are going to stay stagnant and flatline. However, this is where it gets interesting. The new sanctions that were imposed as well, not only on the oil and energy and of course cybersecurity and stuff like that they're focusing on globally. They're also Russia said that they're going to stop exporting like some agriculture. Okay, so that right there lets you know why everything that ran this afternoon ran. That's a perfect prime example. Okay. And then you guys might be saying, okay, well, agriculture stocks ran. I mean, ENSV did pretty decent, but agriculture stocks ran, right? Okay, great. But what about, HYMC? Why did that run? That's not agriculture stock. It did good. It's a gold mining company. This is why you should be looking at, not only the companies themselves and knowing what they are, knowing how they move, but also, like I said, the macroeconomics of it. Not only did the agriculture, be affected, but also the gold mining got affected because analysts are predicting that gold is going to go up. Why? Because interest rates are going up. Gold is a hedge against inflation. They just announced that mortgage rates have jumped to 4%. I know because I went to go look at some lenders and they were like, yeah, the rates are now 4%. I'm like, what the heck? It was just like 0% the other day. But anyways, interest rates changed. They've gone up, which means purchasing power has gone down, which means gold will rise because it's a hedge against inflation. Simple, guys. So if you're like wondering, oh, if you're confused about when to jump in, stocks like HYMC, I'm not gonna lie, I was busy today. I can't really jump into it, but I kept seeing the alert going off, and I wanted to. But when you see stocks like that running, try to identify what the catalyst is that might be running, why it might be running. Did news come out? Did something come out? That gives you more of a conviction to get into the trade, even if you think you're in it at its highest peak. This thing ran to like 138% today. We were alerted when it was like $1.29. It's at like it ended at like 192. So I mean, it had a good room to move. We were alerted earlier, early. So that's one thing I wanted to touch on, like HYMC, how macroeconomics can play in a factor of your small little stock that you're trading. Goes against the market. Let's take a look at it real quick. And then I'll touch on the rest of the agriculture stocks, and we'll be good to go. I just want you guys to kind of understand that point too. But I'll show you why HYMC, and I'm gonna show you how I'm preparing for the next run of things in that sector and how to find it. Okay, so pretty much HYMC. This was it today. We got alert like right here, like hey, HYMC 129, or like one of these entries, we got alerted. But anyways, this thing ran up all the way up here today. It might carry over to tomorrow. We'll see. Actually, it might carry over until maybe even after they announce the rate hike, just to kind of solidify things. But anyways, that's that. So now let's talk about these agriculture stocks. AGRY, I'm sorry, AGRI. When did we get alerted to that one? That was a big runner. We got alerted ENSV again. That ran pretty good too. But wave seed. I loaded up on seed. I'm not even gonna lie to you. Y10. All these stocks, guys, that you were alerted of, or pretty much were the only ones moving today. AGRI. Look at this thing. Okay. Still climbing 360. We got alerted earlier than that though. I don't think the admins put the price though. 253. Volume coming in. We was told this at like 9:55, like back here. And you could have just rolled this thing all day. Even if you still roll, you're still up. Alexa, stop. Let you know I got stuff to do. But anyways, so that's one. Let's take a look at Y10. This thing, same thing. Let's take a look at seed. Had a nice little spike there, and it's holding pretty high. So again, all these are agriculture stocks, and you guys hear a lot of times me or the admins will talk about sympathy plays. Stocks will move in sympathy to another when a whole sector is moving. So if something like that is announced, or you can recognize that, or you hear it on CNBC or something like that, that should clue you in to go look at that sector, see what other stocks are moving in that sector that could probably fit your trading style or criteria. Okay, let me show you an example of how I do it. Obviously, the day's over. When the day's over and a whole sector has moved and little stocks, whether it's the smaller cap stocks or even the bigger stocks have, moved within that sector, what I'll do is I'll go to FinViz, okay? And then, I'll filter out for what's going on in that sector. What you can do is click on Screener, and then you're going to click on All. And let's say I'm like, okay, I know it's the agriculture sector that's, the industry that's going crazy. Let's take a look at it. I'm going to go here under industry, and I'm going to click on agriculture. And then what I'm going to do is filter by price. You know me, I like to trade stocks under 20 bucks. Between $2 and $20, that's my sweet spot. And look at this. What do we have here? I'm going to sort it by value from most of the littles. RKDA. Were we alerted with that? Pretty sure we were. I might be scrolling past it because I'm scrolling too fast. I'm trying to hurry up and get this done so I can get to what I need to do. RKDA, I think we were. Maybe not. Okay, so we weren't alerted with that. Let me look at that chart. How did RKDA look? Did it just gradually climb or did it spike and have some momentum? Oh, it did pretty good. decent movement, about a good, almost a good dollar too. So RKDA is one that you might want to look into. Seed, again, I told you I was going to load up on that. That thing's doing good. MBII, Y10, we were alerted with that one. So some of these had some decent moves and decent value. Um, RKDA had the most value. Maybe we did get alerted to that, and I'm just overlooking it. I don't think it like went off crazy because it didn't have like much of momentum. Just had a lot of range. Anyways, yeah. So all the stocks that we pretty much were looking at are on there. So perfect example, guys, of how to be able to find stocks in the sector that might fit your interest. I'll be looking at some of these tonight. I'll probably have some of these on my watch list to look for in the morning, like Y10, Seed, and RKDA, in addition to AGRI. Because with that ban on, or with Russia stopping exporting agriculture to the U.S., that's going to cause prices to go high, which is going to cause the stock price to go up. Pretty simple. Okay. Um, so that's it. I just wanted to kind of cover that with you guys. Hopefully, this video helped you out with being able to identify how macroeconomics play into factor with, smaller stocks, and why you should consider that, when you seeing, sympathy plays, or if you know like a whole sector is moving and you know it's for a catalyst, look at other stocks as well too, because you can potentially get in those earlier before the movement happens and, just kind of ride that wave in there. Or if you get the alert and you're like, okay, this stock's moving, I'm gonna look at it. Well, what's going on with it? Now you know what to do to kind of look at it. And know for a fact of whether or not you have a strong reason to get in the trade or get out the trade. If you're worried about buying at the high, like if you were to get into RKDA and if you would have heard it go, oh, it's alerted again, and you're worried about buying at the high, wait for another pullback, which is right here, and it would have been all the way to like right here, and you see it's being solidified. In that meantime, you can be checking to see if there's any catalyst that might cause it to run. Okay, and you see it's still holding levels of support, and then it's spiking up again. It's pulling back, holding up levels of support, spiking again. Come on. It's easy, guys. It's repetition. But as you become more experienced in the market, and this is where a lot of traders lose focus and lose, you know, pretty much the whole insight. As you get more used to being in the stock market and recognizing these stocks and how they move and what sectors and stuff like that they're in, the more easier it is going to be for you to make a decision whether or not you're going to want to trade it because you've been exposed to the stock already and kind of already know what to expect. Okay. So that's pretty much it, guys. I hope this video helped you out. If you have any questions, just shoot me a message or email me. Tomorrow's Friday. Might tread lightly, especially since I'm coming off a red day, but we'll see how things move. Again, I'm going to have some of these on the watch list, so look out for that. I'll post it soon. All right, guys. Stay green.